My name is Michael Duke, and this is the show where I analyze stocks that are interesting. So if you find that interesting, please consider liking this video and subscribing to the channel so you see more. Today is part two of a two-part series covering cold storage REITs. A couple days ago, we covered Americold, ticker COLD. If you haven't watched the video about that, please do. There might be some context that is important. However, we will discuss Americold today as well, just by virtue of association. Our article on Seeking Alpha was published yesterday, last night. So please read that as well if you have a chance. A little bit more in depth than the rambling I do in these videos. Lineage is the other big player in the cold storage warehousing space. In fact, Lineage is the largest globally, followed by Americold. So, as usual, we're going to do a brief overview of the company, talk about what they do. We're going to take a look at their numbers. We're going to compare them to Americold here, just because they're so similar in so many ways, and we just discussed Americold, so there's context. We're going to discuss the valuation, take a look briefly at the dividend. We're going to do some technical analysis, and then I will conclude by giving it a grade: buy, sell, or hold. So stick around for all that, and let's get into it. Lineage, ticker LINE, was formed in 2012 by a former investment banker who basically bought a couple of these cold storage warehousing businesses and consolidated them all together, put them under one banner. So the background of Lineage is rolling up the fragmented industry that is cold storage warehousing. You get a sense of what I'm talking about when you look at this here. Again, Lineage, 2 billion cubic feet of capacity. Let's just go down to number 5. By the time we get to number 5, we're already less than 100 million. There's this steep drop off. By the time we get to number 20, we're at a player that's 1% the size of Lineage, but still with a meaningful amount of space. In fact, every single one of these players, millions and millions and millions of cubic feet. So there really is a large amount of roll-up potential. We also get the sense, we look at Americold's investor deck here. This is the industry market share. I believe that this dark blue here represents Lineage. But look how fragmented we are. This is not a duopoly. This isn't like MasterCard and Visa, Waste Management and Republic Services. The way it is like Waste Management and Republic Services is that this is what the waste management business looked like 30, 40 years ago. And Waste Management and Republic Services have been scooping up these smaller fragmented players, and that continues to this day. So for that reason, I may be positively biased towards these stocks because I like their roll-up potential. Lineage has, as of now, 3.1 billion cubic feet, totaling approximately 86 million square feet, 485 strategically located facilities. That's about double the size of Americold. Remember, Americold is roughly 230 or 240 with 1.4 billion cubic feet of capacity, I believe. So Lineage is the major player, the number one top dog. And they've also grown a lot more than Americold has in recent years. Because again, we look at this is 2023, Lineage has grown quite a bit, Americold not so much in that time frame. So one difference between the companies, despite all their similarities, is that Americold is much more conservatively ranked. They're much more conservative in their strategy. There's benefits to that, particularly in challenging market conditions here. There's also benefits to the more aggressive approach that Lineage has. Kind of pick your poison. Okay? Let's just take a look at some numbers here. So this is the second quarter earnings results. It came out 7 weeks ago. Both of these companies, Americold and Lineage, they release their earnings and declare dividends or go ex-dividend on almost the exact same day, month after or quarter after quarter, or Pretty interesting. But that makes for a really good comparison of the two. Revenue slightly up, adjusted EBITDA down, adjusted funds from operation per share up. Global warehousing segment in line with expectations. Global integrated solutions, or the services aspect of the business, grew 8%. We saw that in the Americold numbers, where storage, warehousing and storage numbers were down, services revenue up about the same amount. They raised $500 million at 5.25% and deployed $535 million of growth capital during the quarter. Closed landmark Tyson Foods agreements with newly acquired assets. So they acquired some assets from Tyson Foods, it appears, and closed 3 additional acquisitions. I don't remember seeing anything in the Americold deck talking about acquisition. I don't see there being any sort of announcement there of an acquisition in Americold. And again, this analysis, it is about Americold as well, because we're using our work that we did a few days ago to help in a comparative sense. We already did so much of the context of the industry, so again, I urge you to watch that, read that article if you haven't, because there's some context there. Whereas this video is very much about comparatively, how does Lineage compare? This is a key point here. Lineage is more acquisitive than Americold is. And one of the core pillars of our cold storage industrial thesis is that the industry is so fragmented and therefore ripe for the big players to roll up. I think Lineage participates in that more so than Americold, unless Americold changes their strategy. Americold still makes acquisitions. They still do developments. They're more focused on developments than acquisitions. And I think the inverse is true for Lineage. And Lineage's focus on that might be a little bit more appropriate for where we're at in the cycle, where there's lots of existing warehouses that were built in the last few years sitting empty, or lots of smaller players struggling on a comparative basis that Lineage can acquire. Revenue per pallet, 2.8% compound annual growth rate over the last 5 years. You see how we are, while that's great, volumes matter. And then this is services revenue per throughput pallet. That's 4.8% compound annual growth rate. Those are fairly stable prices, not volatility there. If we saw higher growth and more volatility, that would be something to consider. But we see very tepid growth and modest volatility, if at all, which is good and bad. So here we are, we're guiding to continued decrease, albeit on a less sense in Q3 from warehouse NOI, and then we're saying that services are going to grow 10 to 15% in quarter 3, and quarter 4 even more, 8 to 12% over the fiscal year. But notably, they lowered adjusted EBITDA and AFFO per share guidance. Okay? The market has not liked this stock. Much like Americold down 57%, Lineage down 51% over the last year. Again, we see here position to win, network effects, largest global footprint, plus procurement leverage. So I think that means existing scale makes it easier to win deals, plus consolidating facility. I think Morningstar would tell us that this is a no-moat stock as well as Americold. However, I find that a bit. And here, right here, physical occupancy declined 230 basis points in the quarter. That, I feel like the Americold data was worse than that. Let's pull. Where's the Americold total warehouse segment right here? Economic physical occupancy down 430 and 500 basis points. Physical basis points 230. Oh yeah, so here, look, physical occupancy 75 and 81. 75 and 81% physical and economic versus Americold 63 and 74. Lineage has a superior occupancy profile versus Americold. That's warehouse NOI down 6.3%. We see here rent and storage down 4% for Americold. Americold's lower occupancy, revenue's not declining as much. It seems like Lineage might be priced at a premium, but they have higher occupancy, which means it seems that they might have a better reputation in the marketplace. You don't want to draw too much from that. Global Integrated Solutions, that's our services segment. NOI grew by 8%. Again, that's pretty in line with what we saw at Americold. Services contribution is 8.7. Again, I'm not sure. I'm making assumptions that the integrated solutions of Lineage is the same as services or comparable to service. I'm making that assumption without reading the fine print. It seems like a fair assumption to make given the way the numbers look. But for those of my viewers who might be more educated on the subject, I welcome you to correct me and point it out. One thing that we looked at in the Americold investor deck that I thought was good was the debt profile. We see here, there really is not 1 year. Again, this yellow part is their revolver. That's when their revolver is due, or their credit line. There really is not 1 year that sticks out above the rest in terms of their debt maturity profile. So it is indeed a well-laddered maturity profile. They're not blowing smoke about that. Here, we don't get as clear of a picture of when things are due. However, we do see that they have a shorter weighted average term and a lower interest rate. Here we had a 4.14% with 4.9 years of maturity. Again, here 3.5 years at 2.9%. Given that they just raised 5.25, $500 million at 5.25, I think it's fair to say that refinancing roll interest expense increase will impact Lineage more than Americold. We're not going to calculate the exact amount, but just an observation there. 5.7 debt to EBITDA ratio, I believe Americold is at 6.5. So that's about the same in appropriate. That all largely looks pretty good. All the numbers look pretty good, again, considering what we know about the fact that the industry is struggling right now. There was another thing I saw in here that I wanted. Oh, right here. Again, our global integrated solution, 17-18% margins versus Americold. Warehouse services are also, margins are also going up, but are by 600 basis points lower than Lineage. So Lineage appears to have better or more, marginally more pricing power than Americold does. Furthermore, they have higher occupancy. So I don't know why they have that. It might be a referendum on their quality of service, on the scale of their network, their cost structure. It's really unclear. What is clear, however, is though, and we'll look at this in a second when we look at the valuation. The valuation of Lineage is more premium than Americold, and I think I see why. Another thing to maybe ask is, what is the breakdown? Okay, here we go. Storage versus services, 514. So Lineage actually has more storage revenue than services revenue. We know that Americold, you see here, Americold has more services revenue than storage revenue. Interesting. Remember, this is less cyclical than this, or more cyclical. So I think that's where we get, let's look at our valuation. I already know that the valuation is different, but that's where we get our premium. Just objectively better looking numbers than Americold. And Americold's numbers looked okay. I mean, again, trending in the wrong direction, I believe temporarily. But we got drastically different levels of occupancy and better margins from Lineage. So taking a look at the valuation here, our FFO multiple is 21 times. Our FFO multiple on Americold was 12 times forward. Drastically different. Adjusted, they're making different adjustments though, because you see here 11.33 versus 9 times. So yeah, Lineage is trading at a premium multiple. However, the price book It's basically trading at book value, whereas Americold is still trading at a slight premium. So I think both of these companies are objectively cheap. I think a price to book value that is low is that's a good way to value a REIT. Obviously, the cash flow multiple is good, but cash flow multiple on these, at least in terms of like rental terms, is going to be harder to do here because of the operating component. I don't think that the premium is unjustified here. In other words, I don't necessarily think that there's some sort of arbitrage where Cold is unfairly trading at a discount to Lineage. I think that it's appropriate given what I'm looking at in the numbers. And I think that both companies have really been punished by the market as well. So, to that end, maybe we should, before we dive into technical analysis of risks, let's look at the yield here. Dividend yield at close to 6%, 5.5%, 6%. Again, that's 2 points lower than Americold. One thing we did do with Americold was we calculated the coverage. I already filmed this video before and there was a file corruption issue, so I'll just say I already calculated the core FFO coverage of the dividend, and it actually doesn't cover the dividend. Again, that has depreciation netted out. However, the core FFO of Americold, if I remember correctly, did cover the dividend. So tons of dividend coverage on, or I felt like there was adequate dividend coverage on the Americold dividend, and at that higher current yield that it's got. The Lineage dividend actually appears to be a little bit more thin. However, depreciation is being making the difference there, and so the dividend is covered as far as I can tell on both of the companies. But I would urge my viewers to do their own analysis of that because I'm not going to dive into it for the sake of time. So let's talk about the risks. A lot of the same risks, really, as Americold, where you just have this oversupply problem. Again, right here we saw that this is really what's driving a lot of this negative sentiment. Higher interest rates and pressured real estate stocks. The cold storage bubble popped in the eyes of investors the last few years because there was an enormous amount of supply that came online. Also, tariff uncertainty drove a lot of inventory increase in the first couple quarters over the last year, and now that inventory is being depleted, which is lowering occupancy in these warehouses. Okay, so a lot of headwinds that are really industry-wide headwinds, but you can't. It's tough for me to identify across both of these companies if there's really any company-specific headwinds. Nothing that I could see there. That it's all specific to the industry and also what I believe to be transitory and temporary. That the supply glut won't have permanent impacts, and if anything, it'll further reinforce the roll-up that I see happening over the next few decades. So yeah, I think the big risks here are what we discussed with the Americold shares, where macro factors, refinancing risk, and tariff uncertainty, and cost inflation. They're definitely, these companies aren't necessarily able to pass on all of the energy costs, and we know that energy costs have skyrocketed lately due to many factors, but largely due to data center demand, compute power demand, basically AI sucking up a lot of energy usage, among other things. So that definitely squeezes these companies. I don't think they're able to pass on all of those costs to customers, but yeah, that's probably another reason why these companies have struggled. And then you have what I believe to be a fairly irrational risk in the GLP-1 usage. I mean, that's creating real headwinds for a lot of the food companies, and that does, translate into some different volumes. But cold storage is needed for more healthy foods that, on the balance, have less processing than shelf-stable foods a lot of the time. So I don't really see the connection here that GLP-1s have on cold storage. In fact, I would think that cold storage from a food perspective would be the most insulated from those risks versus things that sit on the shelf, junk food, stuff like that. So let's take a look at our technical analysis. Uh, Much like the Americold shares, just pretty much a straight line down over the last year, really since the IPO. It opened here and shot up, and then just immediately hugged along this downtrend line. And it's also happened to find support along this downtrend ascending channel. It does appear that since April or May, it's been in a more accommodating. Let me get this over here. It's definitely at this kind of more shorter or more accommodating downtrend here. So I don't see any real concerns. Technically here, I think the Americold chart actually looked a little bit better for an entry point just because it was at the bottom of this downtrend. However, this arguably is a stock that has a little bit more support, and we see the fact that it has outperformed Americold over the last year by 600 basis points of performance, even though both have slid more than 50%. So I think as an entry point, this isn't bad here. However, one thing to watch is there's multiple zones of resistance that it'll hit if it bounces from here. The first being this long-term trend line. If it were to break out above that, it might be a false breakout because it could be headed to this line here. So, just something to keep in mind if you're thinking that now is an adequate entry point. That you need to be, don't be thinking that this is going to be some crazy short-term trade here. I see, their potential for further downside in the immediate term. But, let's move on to the grade. You can probably tell by my body language and tone throughout this whole thing. I'm very bullish on the industry of cold storage, especially given the challenges that it's facing now. I think now's a good kind of entry point. I've been watching this industry for years. I've worked in this industry from an investment perspective, and frankly, now I think is a good time to get into it. Uh, Relative to maybe at other points, just given some of the seeming distress or inklings of distress happening. Um, so I'm bullish on the industry, so you can probably tell that that really drives a lot of the thesis. I think in terms of the two stocks, I actually like this one more than I like Americold, even though Americold is more conservatively ran, and I think that that's something that is good across all environments. I do think that Lineage will continue to strike um, by continuing to compound, and they'll be able to maybe scoop up some assets here at pretty good prices. So I like that as well. So I actually, I've got a buy grade on both. I think Lineage gets the nod. I think I like it a little bit more just because it has superior numbers, superior margins, superior occupancy, a couple of pieces of evidence that indicate that it might have a service level that's preferred by the marketplace, even though Americold is a formidable presence and has some long-standing customers. Um, so, yeah, I think where it's at now, a lot of bad has been priced in, and there could be more to go. Um, but we'll see. It's not at some screaming dividend yield here, but it's certainly more palatable than it was. And that being said, I would not expect a lot of dividend growth over the next few years from either of these stocks. I would expect very modest, if not tepid or completely non-existent. If the companies aren't growing much, they don't grow their dividends. I don't like them to do that. We'll see. We'll see what management does because this is the first time that Lineage will raise. Again, they raised here, but that was like a short quarter here. So they kind of prorated this amount over the amount of history here. So that really wasn't a real raise if you're looking into the numbers. But We'll see if they raise the dividend in the upcoming quarter. We'll see. But regardless, ex-dividend date is in a few days. I'm trying to think if there's anything else I wanted to cover. But yeah, I think this gets the nod versus Americold, but I like both. Uh, and I think both are, you know, I've taken a flyer on both of the stocks at this point with a small allocation. I like both of them. Um, I think they both have merit in their own way. You're going to get stronger income from Americold and a more conservative approach to things, so perhaps a less volatile stock over the next few years, whereas Lineage um, has more compound potential, assuming that the thesis plays out. Hopefully, you found it entertaining and useful for your own analysis of the markets, and particularly these two companies. Please leave me a comment. Let me know how I'm doing. Give me any suggestions of other companies to look at if you like the way that I break things down. I'd be happy to do that for you. And hope you've had as good of a time watching this as I've had preparing it for you. And in the meantime, I will see you soon. So have a good rest of your day. I'll talk to you later. Bye.